Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates, and 10-year note yields continue to decline. It was a narrow range at the end of the week. We did dip below 290, first weekly settle we've seen there since April. So while we do talk about the positive data, and we talk about the trending selling of treasuries, we talk about the Fed, and we talk about a lot of things that should push yields higher, we're starting to see them turn around and trade lower. And that is kind of confusing here because we see leverage funds hold on to those shorts, so they're not covering. It's not like we're seeing a short cover rally here, but we're just seeing a slow and steady push, and yields continue to trend lower. This week being no different. And implied volatility in the Treasury market, while it was down most of the week, we closed on Friday with a modest uptick. And why not? We're trading lower yields are what we call the trade of pain. That's going to cause vols to go higher. Likewise, there's those trade negotiations that are being rebooted, and there's still some uncertainties going on overseas. And I think that are all put together. The bond market's smelling something. It doesn't see fire, but it may smell smoke, and that's why we're seeing a modest uptick in volatility and lower yields. And maybe, as we move forward, we'll get some more clarity. And I think we're not going to get key macro clarity until we get the advanced GDP numbers for second quarter. Those don't come out until the end of July. And likewise, we get the Powell testimony to Congress. That'll be in the middle of July. So right now, those are two key events, but we also get the June FOMC minutes first week of July. That will obviously help, I think, untangle a few knots. But right now, the bond market is steadily watching. We're hearing good things from the Fed. We're seeing good things from the economy, but the bond market continues to trade yields lower, suggesting there's something out there that maybe we're not seeing, and the increase in volatility confirms it. This is Todd Colvin coming to you from the floor of the CME Group.